Hey everybody, big news coming out of New Zealand. Thank you for watching News Moves, Markets Forex TV. We cover the currency market and the global economic events. Please like and subscribe to the channel. Thank you. The Reserve Bank of New Zealand just made a bold move to kickstart their economy. They've slashed the official cash rate, or OCR, by 50 basis points, bringing it down to 4.75%. This decision is aimed at addressing their sluggish economic growth and keeping inflation within the target range of 1 to 3%. So what does all this mean? In simple terms, the Reserve Bank wants to make borrowing cheaper. By lowering the interest rates, they're hoping that people will spend more and businesses will invest more. This should, in theory, help the economy pick up some steam. But it's not just about New Zealand. The global economy is also facing some headwinds. Major players like the United States and China are expected to slow down. Add to that the geopolitical tensions, especially in the Middle East, and you've got a recipe for global economic instability. This is why the Reserve Bank decided it was time for some economic stimulus. Now let's talk about the New Zealand dollar. Right after the announcement, the NZD took a nosedive against the US dollar. Traders were quick to sell off the NZD, fearing that lower interest rates would make New Zealand assets less attractive. But there's a silver lining here. A weaker NZD means that New Zealand's exports become more competitive in international markets. This is potentially great news for exporters, especially those in the dairy sector. However, it's not all smooth sailing. The global economic slowdown and those pesky geopolitical uncertainties still pose a threat to New Zealand's export-driven economy. Despite these challenges, some exporters are already seeing benefits from better prices. The Reserve Bank's Monetary Policy Committee is pretty confident that inflation is on track to meet its target. They've been looking at various data points like monthly price indices and business surveys, and they see a continued decline in consumer price inflation. Businesses are also showing less intention to raise prices due to weak demand, which further eases inflationary pressures. The committee also expects that the preference for shorter-term mortgage rates among borrowers will make household cash flows more responsive to OCR changes in the coming months. This means that any changes in the OCR will have a more immediate effect on the real economy. In conclusion, lowering the OCR to 4.75% shows just how committed the Reserve Bank is to supporting economic growth while keeping prices stable. They're staying vigilant and will continue to monitor economic conditions closely to guide their future decisions. That's all for today's update on New Zealand's economic landscape. For the full news story on the Reserve Bank of New Zealand official cash rate cuts, please see the links in the description area at the end of this video. And don't forget to like, subscribe, and hit the bell icon for more updates. Stay informed, stay ahead. Catch you later.